Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and today it's all about Nvidia, the tech giant, just releasing its third quarter results. For more analyst reaction, let's get right to Stacy Rasgon, Managing Director and Senior Analyst at Bernstein. Stacy, always great to see you. So Nvidia just reporting, at least initially here, investors like what they're hearing, Stacy. We're popping about 3% in the after hours, but what do you make of the report, Stacy?
Look, we'll see what they say, but I'm not sure what else you could ask for, at least on the print. It was a nice, solid beat and raise. I mean, the guidance, the buy side's always above the sell side in terms of the whisper numbers. I think the guidance at 65 was probably in the bullish zone on the buy side whispers. So that's great. Gross margin looks like they're going back to 75, which has been a controversy through the year. And I mean, you can just sort of look at Jensen's commentary in the release. Blackwell sales are off the charts. Cloud GPUs are sold out. Compute demand's accelerating and compounding, growing exponentially, entering the virtuous cycle of AI. This doesn't sound like a guy that's getting any more bearish on AI. So looks pretty good.
There were these broader concerns, Stacy, as you well know, my friend, about the AI trade, AI valuations. They have been bubbling up, and I'm just wondering, when you see this print, and especially this strong forecast, does that address those concerns in your opinion?
Yeah, I hope so, right? I mean, Nvidia actually, they had an event a few weeks ago in Washington, D.C. where, I mean, even at that event, Jensen effectively said numbers are way too low. He put up a chart behind him that said something like, we have $500 billion of cumulative orders across 25 and 26, and they kind of said how much they'd shipped so far, which was a relatively small portion of that, and just parsing out what that implied for next year, it implied pretty strong outlook. And I mean, this is very consistent, I think, with that kind of trajectory. And so it seems like their visibility, and we'll hear what they say, but it seems like, at least from that, their visibility is extending out. And hopefully, if he can give investors some comfort that actually is the case, maybe it can put some of these other things to rest, at least for now.
What about, Stacey, the depreciation question? My buddy Josh Brown on his podcast, Josh, he's a very smart guy, very smart investor. He brought this up. And really what he's asking is how long these chips last. How often do the big tech giants, Nvidia's customers, how often do they have to upgrade? Is it 2 years?
Yeah.
Is it 4 years? Is it 6 years? Have you done the work on that, Stacy? Do you have line of sight there?
Yeah, we actually did some work on it this week, in fact. And you say, how long do they use? They use them as long as it's economic to use them. And right now, it is extremely economic to use the older generation stuff. We looked at what's the cash cost of operating these things versus what they're renting them for. And even the older gen stuff, the hoppers and everything, they're already quite a few years old, extremely economic. The contribution margins on those are very, very high. I think it's still a question of demand. Right now, demand is so strong. You're using every bit of compute that you possibly can. And in my mind, by the way, I think most of the AI bear cases, and let's be honest, there were real bear cases we could argue, but I think most of them collapse down to some form of the same thing, which is demand is not sustainable. And if demand is not strong enough to make it economic to still use these older parts, then that'll be a problem. We're worried about depreciation. But if demand weakens that far, we're all screwed anyways, right? So I don't really worry about that right now. And you have to, the GPUs themselves, they don't turn into dust after 3 years. I mean they work as long as you can profitably deploy them at revenue levels that are well above your cash costs. And right now that's clearly what we're seeing, I think.
How, if at all, has the competitive landscape, Stacy, changed for Nvidia over the past 12 months, either in AMD or its own big tech customers?
Yeah, that's right. I mean, you have AMD, and you've got with ASICs, custom chips, Broadcom and Marvell and those kind of guys. And I mean, they're all making inroads. It's a big market, it's a huge market. But at the same time, I think Nvidia is still the best solution for a lot of this stuff. AMD, I mean, AMD's still more. I mean, we're hoping, we're waiting. Their big ramp happens, in a year with OpenAI. Between now and then, their newer products are not getting tons of traction. Everybody's waiting for the MI450s, the rack scale stuff at the end of next year. I think on the ASIC front, it's primarily Google, and by the way, Google has very, very good parts. Broadcom makes those. They're called TPUs. You have to remember that Google's been doing this for well over 10 years. And so I think one reason they've been very good. Most of the other ASICs out there have not been all that competitive, frankly. I still personally think the question of who's winning or losing those sort of misses the point. I think the question right now is still, is the opportunity in front of us still big or is it not? Because again, if it is still big, there's room for plenty of folks. Everybody's fine. If it's not big, then there's a different set of considerations. But again, that same sort of point, is demand sustainable or is it not? I think that is still the overarching question across everything that we're seeing right now.
Final question, Stacy. What do we think the China business look like for Nvidia long term? Or can we not say it, Stacy, because I have to wait and see how this works out with Trump and Xi?
Yeah. Well, I mean, right now it's easy. It's zero, right? So, okay. So whatever they can work out, if they can work out something, it would be upside. So that's how I'm choosing to look at it right now. I think it was smart of them to take it out of the numbers, and clearly the growth outside of China is enough. Like, we don't need it for now. I do think long term, if they can't manage to sell into China, it is a shame. I agree with Jensen that strategically it is important for them to be able to compete in China, not just for the lost revenues, but the idea that the customers in China want to use Nvidia for the ecosystem, and if you're not there, you encourage them to coalesce around local alternatives like a Huawei or something like that, and build up more scale behind those local ecosystems, local alternatives, and they potentially become more effective competitors over time. So, and Jensen hasn't hidden this, by the way. He's been very open about the consequences if they're not allowed to be in China. Right now, they're not in China. It's zero. There's no numbers risk, at least in the near term.
Stacy, we are always lucky to have you on the show. Thank you, my friend.
It's my pleasure. Anytime.
Stick around. Much more As for a Trend still to come. Stocks pause their sell-off streak as investors turn their attention to Nvidia's third quarter results. Yahoo Finance's Jared Blickry joining us now with the Trade Day takeaways. Jared.
First, I want to let you know we will talk about Nvidia, but not
we sure
right now.
will. Yes.
Tech rebounded today, and I'm talking about by the close. So let's take a look at the sector action. XLK, upper left there, that is the only outperformer. When I say outperformer, I just mean that it was a greater percentage than the S&P 500, which is GSBC there. I say that a lot. So tech was the only outperformer today. One thing I was looking at was breadth, and that is a measure of the components within an index like the S&P 500, how many of those are positive versus negative. So the S&P, a shortcut is the S&P 500 was positive today. You can compare it with the S&P 500 equal weighted index. That's where each stock gets one vote, and that was negative today. So that just kind of gives you a quick read of where things stand. Also wanted to point out one thing here. Is it all things go right now? Well, considering Nvidia, it might be. But here are the last 3 days. Tech was leading down two of those, and as we just showed, tech was leading today. But healthcare is the only thing in the green, and for that matter, it's been the leading sector by far this quarter. Here's the quarter to date. You can see healthcare up 6%, energy and utilities barely positive, and you got a bunch of losers here other than that. So we'll have to see if this changes. Maybe Nvidia brings back the tide, but that remains to be seen.
All right, one question we ask on this network, and for good reason: AI boom or AI bubble? Any update there?
Did you ever see that movie Wall Street in the 1980s
Sure.
with Michael Douglas? Famous line, greed is good. I'm citing this up because today on Stocks in Translation, it's going to be released Thursday morning, very early. We had on Jay Hatfield.
That's a smart guy.
He is. He used to manage money for Stevie Cohen, Mets owner, hedge fund mogul. Anyway, here's what he had to say about bubbles.
Bubbles are good. And the reason is that you get to market the first. Mm-hmm. So it's no accident that we have the Mag 8 and everybody else in the world has the Mag 0. And that's because they don't have these super robust capital markets that we do. Capital flows where there's going to be huge returns. Many companies become overvalued, and then you end up with the smaller list of companies that crush it and end up being trillion-dollar companies. So we are going to have a bubble, but therein lies the opportunity.
Therein lies the opportunity. So I guess bubbles are a feature of the capital markets, not a bug, and we're lucky to have them. By the way, I saw a long list of bubbles, many surprises in that list. In the 1940s or 50s, we had a bubble in ballpoint pens. So could be anything.
Could be anything. Can we get to the story of the day now, please? Nvidia, come on.
Yeah, you bet.
They print. Right. What's been the early reaction?
Okay, Nvidia with a question mark because we don't know what happens until tomorrow as of the close. but I do have some estimates as to what usually happens. First, I want to show you the price action. This is NASDAQ 100. We're going to throw some intraday aftermarket quotes, and you can see it's up 4% in the aftermarket here, and you're going to tack that onto that closing price. So let's check out what has happened historically. I prepared this earlier today, did a longish segment on it, so you can find all those details on Yahoo Finance. But the post-earnings return over the last 10 quarters, so that's 10 reports, has averaged 3.6%. 6 out of those 10 were positive, and when it's positive, it has an average win of 9%. When it's negative, those 4 times average loss was 4.5%. So given that we're at about 4.5% right now, and assuming we close tomorrow, might even see some bigger gains. We'll have to see.
I know I say this a lot, but I feel like we do need a crypto update.
Ooh, yes. Yeah, let's get a quick update on that because we actually undercut the lows that we were looking at 24 hours ago. So I think we were at 88 and change. Well, we're back up to 90. Okay, what I wanted to do here was show you some longer term support and resistance levels. 90 was actually a medium-sized level for me. If we do break 90 and let's call it 88 to 90, then I'm looking for 75. Not only is that the low that I'm pointing out right now, that's a year-to-date chart. Let's go back 2 years because it is a prior high. So 90 kind of medium term, but then the big one is basically 73 to 76. And if that goes, well, then crypto's really in trouble. But for now, we've got some sizable losses there. So we'll have to see what comes of it.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend still to come. The softening labor market has become a touchy subject for job seekers and economists alike. Yahoo Finance executive editor Brian Sozzi sat down with Upwork CEO Hayden Brown to get her company's view on the job market.
You know, what's, I think, a silver lining right now, this is a tough market in terms of jobs, and we're seeing that it's been sluggish for many quarters now. We focus on the contingent and flexible part of the economy, which is a $1.3 trillion market in the US. We put out a monthly hiring report, and what we're actually seeing is signs that with AI, more jobs are being created in the contingent side of the equation, which is great news for workers. So it's not all lost. There are new opportunities, especially for people with the skills to work with AI tools and technologies and help companies implement this technology.
The cool thing with your platform is you track a lot of data. You got a lot of things coming into your platform. What do job openings look like week to week? What trends have you seen there?
Yeah, I mean, we see 60,000 jobs posted a week, 3 million a year, and actually the demand has been growing specifically in AI. This is a powerhouse category for us, $300 million of spend this year alone on an annualized basis. So there are places where AI is creating new opportunities, and we're also seeing categories of work that people have said are going to be decimated, like admin assistants or lawyers. Those are also growing on our platform. And so I think the headlines are bleak around AI destroying jobs or around just the market overall being tough. But in the contingent economy, we're seeing a lot of strength. And I think companies are really moving from a more fixed and full-time employment model to something that taps into the flexibility and skills of contract workers.
Today's job market compared to 6 months ago, how would you compare it strength-wise?
You know, I think it's stabilized. I think we were seeing a lot of declines over the last 8 quarters, and in the last 2 quarters, it's kind of flatlined, and it has not improved, to be clear. It's still sluggish, but I think this past quarter, we didn't see it deteriorating further in the part of the economy that we look at, which is contingent and freelance work.
What do you think causes that, or is causing that?
I think there was a lot of uncertainty kind of in the prior quarters where companies were not sure about how tariff policies and other things would affect their hiring. They weren't sure about interest rates and the direction there, so they were holding back even more cautiously because of the uncertain environment. I think some of that uncertainty has diminished, and so they're being a little bit more comfortable moving forward with certain plans. But again, it's not an improvement, it's more that the slope of kind of caution has flattened out, and people, I think, now are moving forward with certain things with more confidence.
If I was still freelancing, and I used to way back when I was starting out, if I was still freelancing today, I would be asking for much higher rates, given that the costs of my life have gone up so significantly. What are you seeing rate-wise from workers?
You know, there's good news here. We actually see that freelancers who have relevant and credible skills in AI are earning a 40% premium versus others in the market. And so for people who are leaning in and are upskilling and reskilling, which again, in the freelance economy, people do this kind of organically because it puts food on the table. They're moving up the learning curve. They're actually earning a premium as they work alongside AI technology. And I think this is the trend for where the market will go.
Where is AI taking away human jobs?
We see it broadly in the labor market and on our platform only at the very low end. So small jobs, less than $300, that's about 3.5% of our entire business. So it's a minority, and it's a minority of the market. That's where there is automation happening the fastest. That used to be 5% of our business 5 years ago. Now it's 3.5%, and I'm sure it'll continue to shrink. The bigger story is actually projects are getting bigger and more complex. People are actually spending more on AI. AI spenders are actually spending 3x non-AI spenders, and every company is moving into investing in AI apps and technology. So work is actually getting bigger and more complex. There's automation happening at the low end, but humans are still needed on a lot of these workflows.
Yes, score for humans.
It is really good news.
This is a good thing.
Yes.
So let's say I'm a worker today. I have a set of skills, but I want to play in this era of AI. Like what do I need to know about AI? What skills do I need to be using to get a job from someone on your platform?
You know, our fastest growing category in the history of our business, and we've been tracking this data for more than a decade, is AI apps and integration. It is growing at such a fast rate. And the good news about AI is it is a bit of an equalizer in that some folks, of course, have been in this field for many years, but you can also learn very quickly on the go. There's tons of online courses, hands-on experience, and so we see people moving up the learning curve very quickly, becoming experts at things like AI apps integration, and then they're able to perform and again earn those 40% premium on their work.
Yeah, we've been talking all morning long about how the stock market is under pressure, but not your stock. Like it's been going pretty well. What do you think the main factor in that has been?
I mean, one is we are an AI beneficiary. So we're seeing this tailwind in demand because of AI, and that category is growing more than 50% year over year. Another is our strategy around investing in our SMB, or small mid-sized company products, and our enterprise products. Those are both working. So at our Investor Day yesterday, we shared new long-term targets that are raised above kind of analyst estimates, and we see a acceleration of growth in our business in coming years.
I lost track of the days. Your Investor Day was actually yesterday.
It was. It was an awesome day.
It's been like the past few days for me have been an absolute.
That's how it is.
Total blur. So looking forward out 10 years, what do you think will be the biggest driver of the freelance economy?
I think every job will have AI as part of it, and every freelancer will be working with AI. We already see that 73% of talent on our platform are using AI on a daily basis. That compares to about 50% in the full-time economy. So these folks are already moving up the curve faster. 10 years from now, every job will have AI as part of it. But what I think is not being talked about is how important human skills will be. Creativity, judgment, problem solving. These are things we're already hearing from businesses. They're looking for even more from their workers because they want those human skills to complement what technology can do. And we'll see that as highly valued in the workforce of the future.
Just listening to you, Hayden, I hear so much growth in AI. Like, it's strong. Is it bananas to sit here and talk about an AI bubble?
No, it's not bananas. I mean, we are definitely in a bubble. There's no doubt. I think there's a difference, though, between what's going on the infrastructure side, where there's so much investment ahead of where the demand is, and the application layer. We work in the application layer. We have solutions ourselves that are AI solutions that are driving incremental value for us. Our customers are also the ones coming to the platform to find talent to build their AI apps and their workflows. I think we're early in unlocking that opportunity. Infrastructure companies are kind of trying to get ahead of demand. AI application companies like us are building that kind of next layer of services that will eventually consume that demand. And I think there's just a timing issue around kind of magnitude of investment and timing of these things hitting reality.
Lastly, how do you use AI in your CEO life?
Oh, I use it for everything: drafting emails, consuming, information and synthesizing it. I will have great dialogues about things like pricing strategies with ChatGPT. So, we're good friends. We talk about a lot of things a lot of the time.
Well, good luck on your journey. Congrats on your Investor Day. This was a very helpful conversation coming at a very key time. Hayden, we'll talk to you soon.
Thanks so much, Brian.
Appreciate it.
Time now for to watch Thursday, November 20th. We're going to start off on the labor force after the longest government shutdown in U.S. history. The delayed jobs report for September is finally coming out on Thursday. Economists forecasting a modest rebound in the job market with 50,000 non-farm payrolls being added and unemployment and hourly wages holding steady at 4.3% and 0.3% respectively on a month-over-month basis. Taking a look at earnings, we're going to get in more insight into the health of the retail sector on Thursday with reports from Walmart, Ross, and Gap. Walmart announced the results for the third quarter before the markets opened. Analysts expecting Walmart to hit the high end of its sales forecast for Q3 thanks to a strong back-to-school season and consumers continuing to look for value. Lower prices and a bigger product selection are pulling in more customers across income levels, helping boost traffic and same-store sales. And moving over to the Federal Reserve, we're going to be getting a big batch of Fed commentary on Thursday. This is coming after comments from Richmond Fed President Tom Barkin on Tuesday. Barkin saying that he sees cause for caution on the labor market and suggesting it may be weaker than available data signals. Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.